everybody, Dave here, Hidden Freedom Investing. In today's video, we're going to go over Vanguard's VTI and VOO. They are super popular ETFs, and I could not agree more. They are literally the best ETFs on the planet, and that's my own term for them. I call them that all the time when I recommend them. Best ETFs on the planet, in my opinion. So super low expenses, and you can't go wrong with either one. But in this video, we're going to compare the two, see what the differences are between the two ETFs, and which one would I buy, which one would I own. Because there's a lot of these recommendations go around this community. You should own VTI, you should own VOO, you should own both. So what is the difference? So that's what this video is all about, what the differences are, which one I'm going to own, which one I'm going to pick, and all that. So make sure you watch through the whole end of the video, because a lot of the comparison and my take is towards the end of the video. So with that, let's go ahead and dig into VTI and VOO. So here we are looking at VTI versus VOO from Vanguard. This is the product summary for each one of the ETFs directly off of Vanguard's website. Let's go ahead and start with VTI first here. Product summary seeks to track the performance of the CRSP US Stock Market Index. Now, I was not familiar with what CRSP was, so I went ahead and looked that up. And basically that is the Center for Research Security Prices, and I'm on the website, and you go to products and investment products and market cap indexes, and then total market index here. And if you click on this, this will give you the full list of all of the holdings for that particular index. There's over 3,500 stocks in that particular index. So that is what VTI is mimicking. Large, mid, and small cap equity diversified across growth and value styles. Now, we are familiar, most of us are familiar with what growth and value is. So basically, you're getting both growth and value styles by investing in VTI. So employs a passively managed index sampling strategy. The fund remains fully invested and low expenses, minimizing net tracking error. So I'm assuming what that means is if there's higher expenses, it would be harder to actually track the other index because they have to account for all the expenses. So let's go ahead and take a look at VOO here and invest in stocks in the S&P 500 index. Now, we're all pretty much familiar with what S&P 500 is, and there's a certain requirement to even have a stock be joined to the S&P 500, and one of those meaning that has to be, a stock has to be over 5 billion in market cap, I believe. So there's some other criteria as well, but in general, yeah, over $5 billion in market cap to be part of the S&P 500. Goal is to closely track the index's return, which is considered a gauge of overall U.S. stock returns. Offers high potential for investment growth. Share value rises and falls more sharply than that of funds holding bonds. More appropriate for long-term goals where your money growth is essential. Here we are looking at the VTI versus VOO ETF facts directly off of Vanguard's website, and asset class for both is domestic stock general, category as large blend, and the most important thing on this particular page or screen is the expense ratio for both is 0.03%, which is fantastically super low. So we're digging a little bit deeper to VTI versus VOO here, and look at this number of stocks. 3,592 stocks in VTI, and that's compared to VOO's 512. Median market cap is 80 billion versus the median market cap on VOO is 125 billion. Now, they're talking about the average of all the stocks in there or in the index. So obviously, because you have a 5 billion minimum to get in the S&P 500, you're gonna have a larger median market cap for 125 billion here, versus over here, the VTI has stuff down in the 1 billion and less. Okay, so that's a big difference there. Price to earnings ratio 21.9 versus 22. That's pretty much the same in my book. Price to book ratio 3.1 versus 3.4 over here, and return on equity 15.7 versus 17.7, and earnings growth rate 11 versus basically 11. Foreign holdings, basically neither one of these particular ETFs really have much foreign holdings at all. Fund total net assets for VTI is 874 billion versus VOO's fund total net assets of 520 billion. And then the share class total net assets 133 versus 127. So the fund total net assets here is pretty big difference between the two. 520 here versus 874 here. Here we are looking at VTI versus VOO directly off of Vanguard's website, the performance of each one of these ETFs. And there is some stark differences we want to point out here. Look at VTI, the inception date is 5/24/2001. Compare that to VOO, 09/07/2010. So that's 9 years pretty much later. So that's a pretty big difference there because this missed out on the recession. So let's look at the 1 year here, compare the difference between the two. And here is VTI's 1 year, 30.8%. Now it's 2019. We just had that go by. So here's VOO at 31.46. So that's less than 1% difference between these two just for 2019 alone. The 3 year, 14.5 versus 15.2. That's less than 1%. Look at this here, 5 year, 11.2 versus the 5 year on VOO is 11.6. That's basically 0.5%. Now we can't compare the 10 year because the inception date on the VOO, but the 10 year on VTI was 13.4 and since inception was 7.6. So we can't compare that with this one here. But so over the last 10 years, if we had $10,000 invested from 2009 to 2019, we would be up to about $35,000 to $36,000. And you compare that to VOO of 2009 to 2019, same $10,000. We're pretty much right around the same amount, so $35,000 to $36,000. That's pretty significant. Here we are looking at the equity sector diversification for both VTI and VOO. And there is some pretty big differences here. Now there is a caveat, and I'm going to go into that a little bit later about this. And you notice that there's a sector missing here, and that's real estate. Now that's kind of interesting because I ran some checks on VTI, and there's definitely some real estate in there. So I don't know why it's showing this discrepancy. And if you add all these percentages up, it came to 100%. I added all these percentages up over here, and it came to 100%. So this does have real estate in it, so that's kind of interesting. So VTI's basic materials at 2.2 versus VOO's 2.7%. So consumer goods at 7.8, and over here we got consumer staples at 7.2. VTI's consumer services at 13.4 and consumer discretionary over here at 9.8. That's a pretty big difference actually. Financials over on VTI is 19.7 versus VOO's financials at 13. That's a pretty big difference as well. Healthcare at 13%, and we got healthcare over here at 14. That's not a big difference. And we got industrials at 13. And we have industrials over here at 9%. So there's a pretty big difference there as well. Oil and gas, 3.9%. And over here they're calling energy at 4%. That's pretty much the same. Technology at 21% and technology over here at 22.8. So that's pretty much the same. And that's probably the most important one in my opinion. It's a major growth in that particular sector. So telecommunications on VTI is at 1.9% versus telecommunications, I guess it's called communication services over here, at 10.4%. It's a pretty big difference actually. That's over an 8% difference. So utilities at 3% and utilities over at 3% over here. That's not a big difference. So so that 3% is kind of interesting because it's missing out of here for the real estate, but I'm going to show you later on in this video, I'm going to give you proof that there is real estate in there. So here we are going to break down the top holdings in both VTI and VOO, and basically they mirror each other. There's no difference here. So the top holdings, the top 10 holdings is Microsoft, Apple, Alphabet, Amazon, Facebook, Berkshire Hathaway, JP Morgan, Johnson & Johnson, Visa, and Procter & Gamble. And they mirror each other exactly. Now, there is a difference though, because we're going to check later on in this particular video. There's a different weighting to both of them, and we're going to go ahead and prove that as well. Here we are looking at VTI versus VOO. This is dividend information I downloaded from NASDAQ.com. I got 5 years of dividend history for both VTI and VOO. The dividend yield currently on VTI is 1.77% and VOO is 1.84%. And using the 5 years of dividend history here, I also calculated the 5-year CAGR at 9.22% for VTI versus VOO's 5-year CAGR at 9.8%. So that's not a big difference in yield or in the 5-year CAGR for either one of those. That's not really significant in my opinion. Before I show you that the weighted holdings and all that differences between VOO and VTI, I'm on Fidelity's website right here, and this is the website that I used to actually get the holdings. So I clicked on view and it kind of shows you all the pages here. And from this page, you can get the top 10 holdings, and there's the top 10 there, and all the weights. And then also, you know, there's 64 pages here, which is over 1,500 stocks. It doesn't list all the 3,000 stocks that it says on their website. They say there's over 3,500 stocks, but I could not find a place to get it from. This is the only place where I could find even download this many stocks out of that particular VTI, which is kind of interesting. There's 64 pages. So I took the time to download every single one of these holdings from every one of the pages, and then, you know, I'll kind of show you that later. I took the HTML and populated a CSV from that using a Python script. And then I did the same thing with the VOO. So we're going to run some Python script comparisons between VTI and VOO, because it's a lot easier to run some comparisons. So I just want to give you an idea of where I got it from. And I searched high and low. I could not find any website out there where you could download just the straight holdings in it without going to every page and downloading the HTML. I could not find any export or API. I had to, you know, that you couldn't, that was free anyway. So here we are looking at VTI and the VOO pages that I downloaded, the HTML. So I basically went to every single one of those pages and then clicked on File and then Export, and I saved every one of those pages. And then I wrote a script called Convert HTML to XMS. So I took those HTML files and then exported them basically into a format called CSV. And from there, I wrote a script so we can kind of compare the two right side by side very easily. And we can also search. So let's go ahead and run a VTI script here that I wrote. So the first thing we're going to do is we are going to query the VTI for some REITs to kind of prove that there is real estate in VTI. So let's go ahead and look at some popular REITs that I have listed here. I picked 10 REITs here. These are some popular ones that are kind of go around the community, you know. Simon Property Group, STAG, AGNC, WPC, Digital Realty, NLY, OHI, American Tower, I believe, and then WPC. So there's kind of, you know, lower cap and higher cap REITs there. So let's go ahead and query the VTI with a Python script that I wrote. And those REITs are in my buffer, so let's just go and paste those in there. And that queried VTI, and there's the holding weights. And look at this though, you know, O, that's the Digital Realty, that's the Dividend Aristocrat, you know, everybody knows that one, so 0.07%. So the highest weighted one is American Tower there, you know, but you got some other ones, Digital Realty at 0.8%. So there's proof right there that there's REITs in VTI. There's real estate in VTI. So let's go ahead and run our second query. And the top 10 weighted stocks in VTI are the following: Microsoft, Apple, Amazon, Facebook, Google, Berkshire Hathaway B, JP Morgan, Johnson & Johnson, Google L, V, and P. Now you notice there's actually 11 there. So what they actually do is they invest in both Google and Google L, but they aggregate them together as just one holding when they list out their, you know, when they list out their sector top holdings. So let's go ahead and pop these 10 tickers inside my Python script so we can get the weights for each one of them. And there's the 11 stocks there, and the number one weighted stock is Microsoft. Now I kind of put them in the order that they're weighted. So Microsoft, Apple, Amazon, Facebook, Google, Berkshire Hathaway, JP Morgan, Johnson & Johnson, Google L, V, and PG. So there's the weights right there from largest to smallest, and that's the VTI weights, okay? So there's 3.78% of VTI. If you invest in VTI, 3.78% of your money is going into Microsoft. That's the, you know, the biggest stock in the world at this point, over $1 trillion. So I'm going to go ahead and take this a step further here. I'm going to go ahead and compare those same tickers, but against VTI and VOO at the same time. And let's go ahead and speed this up a little bit. And there we are, 1 hour later. No, I'm just kidding there. So yeah, it took a few minutes because it has multiple loops it's got to run through to get that information. So you notice here for VTI, the top 10 holdings, there's actually 11 stocks because of the 2 Googles, and there's the weights for every one of them. And we're going to compare that against the VOO's weights. And basically what's kind of interesting here is Apple showing 4.6%, and over here Apple is 3.72%, which is kind of interesting because that is showing as the top weighted stock for VOO. But if you go to their website, it's not. It's Microsoft, right? So I think the issue is the information that I downloaded could be about 6 months old, and maybe at the time Apple was the highest weighted stock at one point. So because I downloaded this information directly off of Fidelity's website, so it's interesting. Yeah, it has Apple here as the top weighted stock out of VOO. So, but we know according to Vanguard's website that the top weighted stock for VOO actually is Microsoft. So that's interesting. But you also notice that VOO's percentage for all their top holdings is higher weighted than all of VTI's here. Like for example, PG's VTI is 0.95% versus VOO's PG at 1.14%. So that's interesting. And the reason for that is because there's a lot less stocks in VOO. There's only 500, a little over 500 stocks. So they're going to be weighted higher, of course, right? So you're cutting out everything below $5 billion in market cap. So that is the reason why you have less weighted here, because there's a lot more stocks in this particular ETF, so you have to weight it accordingly. So you have a lot of stocks below that 5 billion market cap. So let's go ahead and run one more comparison here, and I'm going to compare VTI versus VOO. And so I'm going to take every one of the holdings that's in VOO and compare it against VTI, just to kind of get an idea of how many stocks exist in VTI that are from VOO, right? So we want to know, if we're going to buy VTI, are we really buying VOO at the same time, right? So let's go ahead and take a look at that. VTI. There you go. There's the comparison between VOO and VTI. 495 stocks exist from VOO in VTI. That's pretty staggering in my opinion. So, and there's all the weights right next to every single one of the holdings as well. That's the top 500 stocks, right? So, if you're buying VTI, you're buying VOO, all right? So I bet you a lot of people didn't know that. So let's go ahead and summarize VTI and VOO, what we learned kind of today in this video. So the stocks for VTI is 3,500 plus net ETF versus VOO stocks is 500 plus. Expense ratio is the same for both VTI and VOO at 0.03%. That is super low, by the way. The median market cap for VTI is $80 billion, and VOO's median market cap is $126 billion. So like I was telling you earlier, the $80 billion is because you have a lot of stocks below that $5 billion, and all the way down to like just a couple $1 million market cap. So you have all those stocks in there that make up VTI that's being invested in, right? So that's the reason why the median market cap comes down to 80 billion, all the way down from 126 billion for the VOO. You only have 500 stocks in there, and the requirement to even be in the S&P 500 is $5 billion and above. So that is the reason why median market cap is a lot higher for VOO. Let's go and look at number 4 here. PE for VTI is 21.9 versus VOO's PE of 22.2. And VTI's earning growth rate is 11% versus VOO's earning growth rate at 10.9. VTI foreign exposure is 0.4% versus VOO's foreign exposure at 0.5. VTI's fund net assets at 874 billion versus VOO's fund net assets at 520 billion. So it is a smaller ETF than VTI, of course. And the dividend yield for VTI is 1.77% compared to VOO's dividend yield of 1.84%. And the 5-year CAGR for VTI is a 9.22% compared to VOO's 5-year CAGR at 9.8%. And the VTI beta is 0.99 compared to VOO's beta 0.99. So I think the biggest things glaring out on this page is the stocks in VTI at 3,500 plus and the 500 for VOO. So that's a big difference with 3,000 more stocks in VTI that you're invested in that particular ETF. The other big thing here to note is the median market cap of 80 billion versus the median market cap for VOO at 126 billion. That's a big difference as well. And the other thing to notice here is the fund net assets for VTI is 874 billion compared to VOO's fund net assets of 520 billion. That's a pretty big difference. There's a lot more capital invested into VTI versus VOO. So there you have it. There's the comparison between Vanguard's VTI and VOO, two of the most popular ETFs on the planet. And if you're going to talk about ETFs in any conversation, they pretty much almost always pop up. And for good reason. If you invest consistently in VTI or VOO over a 20 or 30 or 40 year period, you will become wealthy over time, almost guaranteed. So with either one of these, you're pretty much, invested in the stock market, in the best companies in the US. Now VTI, you're gonna get a lot more stocks in your investments, below that $5 billion market cap. So you're gonna get like the GoPros and all that stuff in there. If you want to stick with the larger cap stocks, then invest in VOO. Okay, so it's got higher weighting towards the biggest companies in the US and the most, biggest companies in the world, really, like Microsoft and Apple and Google and all that. So, but that said, either one you really can't go wrong. And would I recommend owning both in the same particular account? No, I would not recommend that, because VOO is already in VTI. So why would you invest in both in the same account? Now I don't see a problem with investing in, like, say, VTI in a taxable account, and then say your tax deferred account investing in VOO. I don't have a problem with that at all, but I don't see why anybody would own both in the same account. So which one would I invest in? I would invest in both, number one, but I would probably lean more towards VTI just because it's got 3,500 stocks in there. It's a wider range of diversification. You got a lot of stocks below that $5 billion market cap. And also, it's been out longer, it's been through recession, so we kind of know how it's going to act towards a recession. VOO has not been through a recession, so we don't know how it's going to act. Obviously it's going to track the S&P 500, so we kind of look at how that acted towards the last recession, but we don't technically know that information, so it's relatively new at this point. But in general, if you invest in either one of these ETFs, you will do really good over time, because these are the most premium ETFs on the planet, in my opinion. So with that, let's go ahead and end this video. I appreciate everybody tuning in, watching this video. And go ahead and leave some comments below if you have any questions or concerns. And I appreciate all my recent subscribers and all my old subscribers. Here's to a great 2020. Happy New Year. And go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.